All right. Another day in the books here, another day in the rear view. Hope you guys had a great day out there. But you know what I always remind you though, right? We're only as good as our next trade setup, so it's time to get back to work. It's time to get ready for tomorrow's trading session. It is about that time of day again here after all. It's Wednesday evening. It's April the 17th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Now, remember, I help new traders find predictable, dependable, profitable trading opportunities using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little different. My job tonight is to find the best of the best opportunities setting up, the best levels, the best patterns, the best structure, the best setups for tomorrow. That's Thursday's trading session. I'm going to cover crude oil, S&P, Nasdaq, gold, and euro in tonight's video newsletter. I'm going to jump in first to oil here tonight because oil is in one of those classic situations where we need a little bit more time to see more information. I'm always telling my clients in our trade room, sometimes the best course of action is no action at all. Let's jump into that oil because the oil has just a few more inches to go, and then we should be able to figure out what the best plan is. Let's jump into that oil market here tonight first because as you can see here, the market is definitely have a bearish bias to oil tonight, right? We had that big move up, and of course now we're kind of tumbling back down. So we definitely have a bear market on the chart right now, but the big problem is this is one big trading range. Now, of course, this is the rollover contract. This is the 619. We talked about rollover in last night's newsletter. So we know we're bearish, but look where we are. We're right at the low of a trading range. Now, the way I see this, we've got a nice big opportunity here now to go all the way back down to retest yesterday's low. But until we get there, though, I've got to see a little bit more information because in all reality, this could just be a bounce off the low of this range. This could easily be a 1, 2, and then back up to the high of that range. If that's the case, I'm looking for a couple different specific scenarios as we go back up into this range. This is going to be a little bit of a thread the needle right here because we don't want to trade the middle, right? So we'll dig into that in a lot more detail tonight on the video. And then again, you know, with this overall bearishness here, though, I've got some targets hanging out down there around that big low from yesterday. But to get there, though, we've really got to be careful because I don't want to sell the top, right, of this channel. So it's going to be a little bit of a wait and see here right now. Sometimes the best action is no action at all. And we're going to talk about kind of what I'm waiting for and then what some things I'm looking for tomorrow or at least in the overnight so that while this thing is setting up, we know what the best patterns are going to be as we get a little bit more volume into Asia here. So we're going to jump into the black gold, to the Texas tea, the crude oil in much more detail here tonight on the video. Over on the S&P tonight, S&P's in a very similar situation. I don't think anybody is arguing with the fact that we are bearish right now. The only question we have is, do we feel comfortable, right, selling towards the low of a range, right, with the low of that range? Ranges tell me to buy down here, right? Sell high and buy low. So again, we have some very nice targets waiting for us. Had that big run up from the Asian session. We got that pendulum swing. You guys know all about pendulum swings, right? Since you watched last night's newsletter. So we know where our targets are down here. The problem though is I don't want to chase after it as it goes lower because, well, if you chase after it as it goes lower, you'll be stopped out on the pullback. So I don't want to chase after it. I also don't want to get caught selling into that low of that range either because that could really backfire on me going higher here. So this is, again, like I mentioned on oil, it's going to be a little bit of that thread in the needle here right now. I would love to look at this as a 1, 2 back in. So we're going to talk about which patterns I'm looking for on that. And then honestly, I think we're going to have to get a little more confirmation down here before we can get that sell because, again, I don't want anything to do with the inside of that range there. So we have got a lot to talk about tonight on this S&P. What if it goes up? What if it goes down? How do we buy it? How do we sell it? And, you know, maybe we get both of those. You know, maybe we're buying it and selling it tomorrow. I'm going to break all of this down for you guys here in just a few moments. Over on the Nasdaq is a walk in the park compared to the oil and the S&P. Bottom line is here, we've got that move up, we've got that move down, and we're kind of sitting right inside a neutral trading range. Trading ranges tell me to look for two specific patterns, both above to sell and below to buy. We'll talk about the best patterns to sell. I'll talk about the best patterns to buy, and we'll put together the whole plan here right on that Nasdaq. We'll also talk about what a breakout looks like on the NQ as well. Over on gold, gold continues here to be bearish. You know, we talked about this last night on the newsletter. We had 1, 2, 3, maybe 4 legs down here into that trading range. So sellers were waiting here to sell, right? That move going back down again. We kind of saw that coming a mile away here. But now we're bearish, and look where we are. We're right down around these lows. Not a great spot to be selling, I'll tell you that much. Not a great spot to be selling. I want to be selling up above the top of that trading range. And honestly, like I said yesterday, with a good setup, I think there's definitely potential buying opportunities going back up into that range. So we're going to play both sides of this, and again, kind of see what we get here on the gold and the overnight into the U.S. session tomorrow morning. But buying low, selling high. I think we can have a really good day tomorrow on this gold because we got some key news coming out tomorrow morning. We're going to grab a look at that here in just a moment. We'll talk about gold, and of course, we'll wrap up tonight on the mighty euro. Euro, of course, classic, right? Break up, failure, and back down. Market starts off bullish, finishes off bearish. Maybe it's a little bit of a bear bias to it. I'm calling it neutral right now. I think you'll be able to be a buyer and a seller on this market. Same type of situation as we saw on the Nasdaq. It's very much a neutral momentum to this market right now. What does that tell us? It tells us I want to buy low. It tells me I want to sell high. And again, there are two patterns I'm looking for specifically to do that. And then I'll also talk about what a breakout will look like, right? How do we break out of that high? How do we break out of that low? When is it safe to trade the breakout? We'll talk about those details tonight on this video newsletter. Boy, oh boy, I really appreciate you guys being here with me every evening on this video, Monday through Thursday evenings. We got the euro, the gold, the Nasdaq, the S&P, and the oil. We're going to break the whole entire plan down here for you guys tonight. But before we jump into the charts, right, I want to make sure you never miss another great video. It's really, really easy. Make sure you join our mailing list. That way you are the first person to see that new video when I publish it every evening. I send out this email first so that everybody who's on my email list gets the prime, right, information right hot off the presses. To do this, just go right to the blog here at sidewaysmarkets.com. I'll put all the links in the description of the YouTube video as well. And all I need is your name, your email address, and then hit that subscribe now button. Now, don't forget, when you hit subscribe, your job is not over. You need to verify your email by checking your inbox, and make sure you don't forget, sometimes those emails get stuck in a spam folder somewhere. So make sure you whitelist School of Trade. Make sure you check that spam folder to make sure, right, it's not hidden in that corner of your inbox there, right, where you may not see it. It's important you check that email because I'm going to send you a welcome email with a bunch of good stuff in there so we can get the most of our time together every evening. So don't delay. Grab that mailing list, right? Get on the list. That way you're the first person to see that newsletter every evening when it goes live. And then before we jump in though, I need your help. I need your help. I'm always trying to make this video newsletter the very best it can be, which means I'm always asking you guys to give me some new ideas, right, for topics that you need help with. So here's the question for today. The question is there a roadblock for you that's standing between you and becoming consistently profitable? In your opinion, what do you think is the most important thing that you need to learn in this newsletter? What's the most important obstacle that you need to overcome? Is it technical analysis? Is it waiting for entry patterns? Is it choosing the right entry pattern? Give me some feedback. Let me know what will help you make the turning point in your trading career by posting a comment in the comment section below. It means the world to me when you do that because that's going to give me more fuel to keep making this newsletter even better every evening. So drop me a comment in the comment section below. And if you love this video, if you tune in every evening to our nightly newsletter, make sure you give me a thumbs up right in the thumbs up section there below the video tonight. That would mean the world to me to get your support here on our YouTube channel. And don't forget, guys, right, speaking of support, I'm always here to give you guys help every step of the way. Don't be afraid to pick up the phone and call me in the office. I'm here on West Coast time here in Los Angeles, so it's like 8 o'clock in the morning right now for me. So I'm here, I'm kidding with you, but it's early here, right? So if you watch this video and you got more questions, please feel free to pick up that phone and call me anytime, 24/7. I promise no call centers. I'm not rerouting you to some random place, right? I'm going to answer that call and answer all your questions. So call that toll-free phone number. I'm not a robot. I'm a real human being, and I'm really excited to help you with your trading success. All right, it is great to be here once again. Love, love, love spending time with you guys here every evening on this newsletter. Let's get back to work, though, here. Tomorrow, last day of the week. Last day, you're right, it's a Thursday, right? Friday's a holiday. We talked about this earlier this week. Tomorrow is the last day of the week. We get the Good Friday holiday on Friday. It's not just the U.S., right? I believe it's Australia, UK, can't recall, but it's a bank holiday, right? So you'll see there'll be things open, but banks are closed, right? It's a big deal. It's Easter weekend. It's a very popular holiday weekend. You know, spring has sprung. Everybody's out and about. So it's a pretty popular weekend here in the U.S., and because of that, right, Friday's closing. Tomorrow is really the last full day of trading. Now, in my experience, the day before the Good Friday holiday is usually about a half day. And what that really means is you want to get to your desk early tomorrow, and really as of about 11 o'clock, 11:15 Eastern time, you really got to have a good reason to be trading tomorrow. So get to that desk early, pour an extra cup of coffee on, right, to get up earlier tomorrow. Get that analysis updated. We'll be in our trade room tomorrow, obviously, like we always are, at 8 o'clock Eastern time, ready to pounce on these opportunities with you. And hopefully, I'll see you there with me. So tomorrow, last full day, but again, with this being the first dose of warm weather for a lot of the places around the country here in the U.S., at least in the northern hemisphere, I do expect tomorrow to be kind of like a half day, right? So get to it early, get out of that early. And, hopefully I'm wrong. Hopefully the afternoon is great for you guys. But I always tell my clients, get in the habit of making your money in the first half of the day. That's where the most reliable trades are going to be, right? That U.S. morning session, right? London into the U.S. morning session as of 11:30. You have a good reason to be trading tomorrow, as always. Now, what do we have on the schedule tomorrow? We've got quite a bit going on tomorrow. Don't let this lack of major news, right, fool you. We got a lot going on tomorrow here. Jobless claims at 8:30, not that big of a deal. Philly Fed survey, not that big of a deal. Retail sales, yes, big deal tomorrow. Big time news event tomorrow at 8:30. Now, that news event will likely have a big impact on things like Nasdaq, right? Things like the S&P, because it's retail sales. If you go a little bit later on in the morning, we have the PMI composite flash. That is not listed as a Red Star news event, but in my experience, currencies, gold, dollar, right? Remember, anything that has an I on the end, right? So PPI, PMI, right? All of these indexes, these are money supply. These are inflation numbers. And anytime you talk about inflation, you got to think dollar. And then when you think about dollar, you got to think about currencies, right, that are tied to the dollar, like the euro, like the yen, like the CAD, like the Aussie, right? So go down that list. Those currencies are red hot tomorrow around that 9:45, and of course gold, right? Gold is definitely something we want to be keeping an eye on tomorrow morning as well. So this really plays into the theory tomorrow. Get to it early, and hopefully we'll be able to ride this thing into that 11 o'clock hour, and we'll get some good momentum going into lunch. And then tomorrow afternoon, just be careful, right? Just be careful tomorrow afternoon. Get a bunch of bill announcements there. And again, I would imagine tomorrow afternoon will be a relatively illiquid market because markets are closed, like closed on Friday. And nobody with any big buying power is going to be putting their money at risk, right, late in the day on Thursday. So might as well get your money out of the market early And again, speaking of getting there early, tomorrow morning, we're going to open up our trade room at 8 o'clock Eastern time. And I want to see you there with me, right? We always have a great day in our trade room, and it would mean the world to me to have you there with me tomorrow morning as a brand new member. Now, jumping into our chart tonight, we get the oil, the S&P, Nasdaq, gold, and euro, right, on these charts here tonight. First things first, though, looking at the oil here this evening, I always try to think about, is this market a range or is it a trend? And if there is a range, the range always takes precedence, okay? If there is a range, that always takes precedence. So let's do this. Let's zoom out a little bit here. Keep in mind, we did get rollover today, right? We did get rollover here. Let's zoom out a little bit here now so you can kind of get a bit of a bird's eye view on this. And you can see what I'm dealing with, right? We got a big move up, so we got a bullish overall, and then into this trading range. Now, what do we do with a range-bound market? We buy low and we sell high. Where are we right now? We're down around the lows. So I want to be a buyer on this, right? I want to buy this now going back up into that range, okay? Hold that thought. Now that we know we're below that range and I want to be a buyer below that range, now, how do I do that? Because the challenge I'm seeing right now is momentum, right? Momentum. Is momentum bullish? No, in fact, it's the exact opposite. We see a strong move down, a pullback, and look at that strong move off. That is definitely going to be, right, a 1, 2, 3 reversal. So what do? We draw off those highs, up off that high, and sure enough, the bears come back in to sell off that high. If you follow my newsletter, you know that pattern like the back of your hand. So sellers come in, right? They sell it off, and now, of course, it's obviously, right, a bear market. So knowing that it's a bear market, now what I'll do is I'll mark up these two lows, bring it up to that high. That creates another variation of that hidden channel. And now I'm looking for sells off that high. But wait a second though. That's not really helping me right now because look what we're selling. We're actually selling. Wait, you want me to sell right into the low of that range? Yeah, probably not going to happen. Right? What'll happen is you'll see this, right? You'll see this will happen. It'll go back into the range. You'll try to sell it and it will try to kick you out and go higher. So this is a disaster waiting to happen up here, right? That is a short seller's stop out waiting to happen, right? Because again, whenever I have a range, the range has to take precedence. So the big problem is we're bearish. And so if I want to be a seller, I have to sell. Oh, that's a very difficult pill to swallow. Very difficult to want to sell right at the low of that range, especially right into the low of that range. So I really can't do it that way, right? And of course, at the same time here, right, I've got this bearish momentum. I don't want to miss out on that move. It's almost like we've got to get a little bit lower just so I can get that pullback to get me in before we get back into that range. And that's exactly what I'm looking to do here to be a seller right now. You know, I talked about earlier, oil is really setting up right now where we really have to wait and see. We have to wait for more confirmation. We almost have to. It's almost like when you're driving on the highway and it's rush hour traffic and you have to kind of go with the flow until all of a sudden you find an open spot there and bam, right? You change lanes and you're free. It's a lot like that tomorrow. We've got to kind of get into the rhythm of it, get moving with traffic, and then once you see that spot open, bingo, blinker, right? Check over your shoulder and take it, right? Can you tell I live in Los Angeles, right? Traffic is everything here in LA. The bottom line though is we got to wait for more information, but we have to get into the flow though. So when we see that chance, we can grab it. So here's what I'm thinking right now. Right? I want to be a seller going with momentum, but I think the best thing to do is going to be, let's get at least a little bit lower here, because then if I can get lower, then I can adjust my channel down. This will be a whole lot better if I can adjust this channel down and then go up and sell off that high. So that's right on my radar right here for tomorrow. So now imagine now we get something like this. right? Let's just break this down a little bit, right? I got my measured move. I know where my big target is, right? My big target's down here around that 63.46. And then from there, right, the big objective is down to get to that 63.13, right? That's the low from yesterday's session, right, as you recall. So what I'm looking for now is I'm really looking for more information. I want to see a nice push lower. Really get this thing going lower. Show me you mean it. Then I can look for the pullback. Now I can adjust down this channel now. I've got my level of resistance now waiting, and now I can start to plan the entry on this. So if we can get this market now to push a little bit lower here, then I can adjust my channel down. Then we can wait for the setup. And the setup is actually pretty easy. I'm looking for a pullback off the low. At this point, the moving average will be coming down like this, and here's the setup. You want to wait for those buyers to try to buy the pullback and run back in, okay? Because that'll happen, right? It'll go down, it'll come up, the moving average will be below it. The buyers will try to buy into it, right? Which won't be a very reliable trade at that point because it'll be so bearish. We'll talk about the buy side in a moment here. But really what I want to see those buyers try to buy that pullback. Once they try to buy that pullback, now I've got them right where I want them, right? I've got that level of resistance overhead. I've got the low of that range acting as resistance. That's why it's so important. There's such a big difference between selling here and selling here, right? If you try selling up here, you're going to get caught and it will run back up here. If it's above the low of that range, stay away. Right? Stay away. We'll be buying that if it gets back inside that range, and we'll talk about that in a second. The bottom line, though, is once I see those buyers trying to buy off that pullback, now I know that if they fail, we're good to go for one more leg lower. And that's where my entry will be looking for right here tomorrow morning. So now imagine this setup, right? We finish off the move going lower. We pull back. The buyers now, of course, think, oh, we're going back into the range, right? But it's bearish. We're not bullish yet. We let them commit off the moving average. We look then, and we can bury that thing, right, back down, right, to retest the low. That's going to be the setup I'm looking for. It's a failure setup, right, off the high of that channel. Now, with that, how do we buy this thing? Right? How do we buy it? Buying it is probably going to be the easier of the two, but it's going to take a little bit more patience. So here's what we want to do. Again, the low of that range is the big deal right now. So what you're kind of thinking right now is I want to see the market go up. Again, imagine for a moment that you don't know that range is there, right? So imagine for a second here that you don't know there's a big range here. Because it would have been easy for me tonight not to look bigger picture and just get right locked in right here, right? So imagine you don't know there's a range there, okay? You got your channel coming down. This is normally a very reliable channel, okay? The hidden channel, which we talk about a lot in the newsletter. The problem is it's at a bad location, right? It's more likely now going to go back up. So here's the idea. We want to see this thing go back again, get up around the high of that channel. I mean, it could go as high as the high of that 32 area for all I care, but get it back inside the range. Then, because we're so bearish, you've got to think these sellers are going to probably try twice. I want to see them try once, see them try twice, and ideally, you'll see a trap off that second try. The bears will try once, the bears will try twice, and ideally, you'll see a trap low, right? Now, pay attention. This is where the signal candle is going to be so important. For example, look at that candle right there. See how that candle right there, it closes just below the range? Okay, I can almost guarantee you're going to see that happen tomorrow, right? So what you don't want to do is you don't want, if I go back here, if we get that trap low on this, okay, and then we see one of these like that, nope, that's not going to work very well. Be very careful with it closing below the 06. Okay, what you want is you want to see it trap and then nice strong green candle, right? Get that close back inside the range, and if that's the case now, and keep in mind, guys, keep in mind, again, I want that candle closing above the low of the range, but not too big, right? I don't want to go here. I'm not buying up here. I'm not buying down here. I'm literally buying right there, right? Okay, here's the trick I'm going to use on this. I'm going to wait for a nice strong signal candle. Okay, now pay attention. Once I see that signal candle, now take a limit order and bring it up and drop it right in below that low. What will happen is the market will usually go up, pull back, and get you in from there, right? Literally threading the needle here because, again, you don't want to trade the middle, right? You don't want to trade the middle. So, again, go up, let those bears try to sell it a couple times, get that nice strong signal, closing inside the range. Now, you can take this as an aggressive buy right there. What I like to do, though, is I always like to, once we get a close back in, like back here, right? Once it closes back in, it comes right back to get the order. Makes sense, right? So we go back in. We see the signal going higher. Rather than chasing after it and buying it as it goes higher here, just drop that little order in right there. Right? Put it right there. It'll almost always come right back in and you'll be buying the very low of that move, right? At the very least, you'll get the smallest amount of risk possible, the smallest amount of pain going against you before the market rips higher here. So a lot of this is just a game of patience right now. One is one more leg lower, up, failure, and down. The other is we go up, one, try, fail, right? Trap low. And again, watch that signal. If you get that signal all the way back here, stay away from it. You've missed it. Unfortunately, that happens sometimes. But what happens a lot of times is you get that nice big signal. Nobody wants to buy it up there, right? What do? They put their order right there. They wait for it to come back, fill the order, and go. It's a buy limit order instead of a buy stop, right? You don't put the buy stop above that high, right? You put the buy stop right, or at this point, it's a buy limit right at 64.06. Guys, we'll go over all the details of the entry techniques inside of our beginner classes, right? Our beginner classes here at School of Trade will help you set up all your charts and do it all properly. So we've talked a lot about these patterns so far, right? That failure pattern, right? That trap pattern. I have so much, right? And then, of course, using the correct entry type, right? Using the correct entry timing to grab the correct entry on it as it goes back higher. I'm going to keep going tonight, but I have so much I want to share with you. So if you want to keep learning more about my favorite entry patterns like failures and traps, if you want to see hundreds of examples of how we use the right entry techniques like that limit order technique I just described, grab the free course. Because I cover most of those details, right? I don't go into the nitty-gritty details of the entry techniques, but you'll see me, right, looking at opportunities here, right, in our trade room. Grab that free course in the upper right-hand corner. Learn all my favorite patterns. Learn all about our three-step strategy. I'll put a big red button below the video tonight on our blog here at Sideways Markets as well. You guys will love, right, that video course. Now, one more thing here. How would this thing turn bearish? Right? Or how we break out. 1, 2, 3 breakout, right? So we know what we're doing here. We know what we're doing here for the trap going lower here, right? What if the market keeps going lower here? Okay, again, we know we want to go lower, up, and then failure back down. What does a breakout look like, though? How would this market really get on its horse? 1, 2, 3 breakout. So if we see this thing run lower, pull back to the moving average, and then jump off that moving average, well, that's your cue right there. That's a breakout. I'm going to mark up that low. I'm going to mark up that low, and then up to that high to create that hidden channel, and we'll try to sell right off that hidden channel. This is the same basic thing here, right? It was a 1, 2, 3, mark up that low, up to that high, and you can see, I mean, it's kind of tough to make this stuff up, right? You can see for yourself, right? They're coming right off of that high. That's the same pattern, but it'll be here. 1, 2, 3, and again, we'll mark up, right? And that's we're going to sell right off of that high. Again, I cover all of this stuff inside that free trading course in the upper right-hand corner, right? Along with hundreds of examples of real setups we find every morning in our trade room. So great chart there on the Emini, on the crude oil about how we've got to wait patiently here. Now, over to the S&P here tonight. The S&P, as you can see, is in a very similar position. This looks a whole lot more bearish than the oil does. But again, when you find yourself, right, when you find yourself at the low of a trading range, right, when there's a range-bound market, what takes precedence? The range-bound market, right? So we've got a definite trading range here, right? Price goes up, sell it back down. Price goes up, back down, right? Go back down. I want to buy it back up now, right? In a range-bound market, we're selling high, we're buying low, and we're trying our best to stay out of the middle, right? So as we go forward into this, you guys learned about the pendulum swing in last night's newsletter, right? In last night's newsletter, we talked about the pendulum swing. The amount of the move above the range is the amount of the move below the range, right? We get a little kick higher here off that Chinese data overnight. So we're looking at targets now down around this 94, down around that 93. That is exactly where our objective is for those sellers. Now, of course, with those sellers, I've got that hidden channel, right? I've got my move lower. This turns into a spiking channel now. I draw out those lines, that line, there's my channel, right? And of course, we know we have, right, a spiking channel. The problem we have right now is that spike and channel patterns usually tell us, right, to sell up inside those swings, right? That's your typical plan there for a spike and channel. But I don't want to do that. That puts me selling right into the low of that trading range. At the same time, right, as we go lower here, if we do run lower, I don't want to sell down here because, again, I'm at the low of the range. And then, of course, on top of that, I've got the pendulum swing down here. So I got too much support down here to sell, right? I'm too bearish, though, to be a buyer. This is one of those classic situations where you're too low to sell, but you're too bearish to buy. So what do? We have to kind of wait and see, right? We have to kind of wait and see on this and see what we're going to get. A lot of this is repeating it, right, from the oil. You know, I'd like to see us get a little bit lower, pop back up, get that failure. Now in this one, we actually have a lot more space to work with because we got that pendulum swing down there. So in this example, I should be able to get that combination of what we call a failure, right? A failure into a pullback. So imagine now in the S&P, we finish off that move going lower. That frees up some space now. So now I can use the underbelly, right? Almost like this area right there now as my new battle zone, right? So now imagine now we go up again towards resistance. The moving average comes over. The buyers, of course, are now thinking, oh, buy back into it. The problem is, right, they tried that already back here, and you see what happened? They tried to buy the pullback right there. That didn't work, right? It's not a huge surprise. Again, it's bearish. So if we do get this move lower, I want to go up, get those buyers trying to buy the pullback, and then I can look to sell into that failure. Now, at that point, we should have a little bit more space down here to get one more setup going, and that is that breakout pullback, right? The pullback that comes there afterwards. Okay, the pullback pattern, this combination right here, guys, by the way, right? This combination is a great combination, right? So strong move down, kind of wait for a little more information, get back off that low. That brings the moving average over. Buyers will try to buy as it goes higher, right? We know in a bear market that doesn't work very often. And so just like those buyers get stopped out and price collapses back down, right? Just like those buyers get stopped out and price collapses back down, same basic idea here on the S&P, right? I'm looking for those buyers to buy the pullback. If they fail, I'm looking to sell into their failure. And then because I have some space down here, I can also look for that pullback pattern as well. We didn't have as much space on the oil, right, to kind of fit that pullback pattern in. That is a two-try failure pattern along with a breakout pullback pattern. And again, you'll learn a lot of those details, right, inside that free trading course. I would highly recommend it for anybody who wants to get the most out of their time with me here, right, every evening. And then again, if I'm wrong on this, right, or I'm not wrong, but if we do end up back inside the range, well, now you've got to assume, right? You've got to assume there are a lot of traders out there that will see this as being a selling opportunity. Now, guys, let's be honest. For all I know, it'll go right up and right back down, okay? But I am not in the business of selling into the low of that range. Not my cup of tea. Not going to happen. I'm not going to take that trade short. What I will do is, if it does run up, I'll wait for it to collapse back down, and then I'll look for a trap, right? And I'll sell once I have the confirmation, right? But for me though, if we end up back inside that range, I'm looking for the same thing we talk about on oil, right? If we end up back inside this range right now, well, first of all, if it just bounces right now, that'll be a rising support trend line. So now we really got them where we want them. Now we want to see a 1, a 2, right? Remember, get that trap low. Let those bears try once. Let those bears try twice. Get that trap pattern here. And then again, look for that nice strong signal candle, and then take your limit order and just drop it right in below that low, right? Rather than buying up here, I'm buying down here, okay? And most often, that will come right up, kick back, right? And get you in at a much better price. Again, kind of threading the needle, if you will, right? And we go over all of those little small details about how to use limit orders, right? We talk about that in our membership classes. In our free trading class, you'll see me doing that, right? So I'll show you kind of how it's done, but we'll really roll up our sleeves and really teach it and do it inside the membership classes. The free course, though, is great for learning the strategy, right? Learning all the patterns, and then we'll get into our detailed, nitty-gritty details inside the membership classes right here at School of Trade. So those are the two basic components, right? I'm looking for here tomorrow, right? I'm looking for that run lower so I can get it up, failure, and back down, okay? Or up, 1, 2, trap, and go. Again, thread the needle here, right? Getting in. Now, what if we get both, right? Could we go lower and then come back in? Oh, absolutely we could. Let's say, for example, we make a run lower here. And again, you know that pendulum swing is right there, right? Major support down there. So let's just say, for example, here, let's say we do get that run lower here, but then we see this, rocket ship higher, right? Let me run back up. If we see this thing literally V-bottom off of that low, like, I don't know, like that one right there, right? If we get something like that, right, tomorrow morning, okay, we go in, right, big move down, right back up. It's pretty simple at that point. Now they will have completed their mission, and now they're going to want to go back up to retest the high. So if they do get that strong move down, remember, it's all about the moving average, right? If we go back up and we can't get away from that moving average, that's a sell, right? It's all about how the market responds to the moving average, right? Look back in time here. Look at how the buyers were unable to get away from the moving average. See that? See how once they got back above the moving average, the sellers came in and smacked them right down again? Okay, that's a bear market. So if we see that same situation, again, it'll be another sell. But if we see this thing now, right, if this thing runs, right, we run lower, we jump higher. If it really runs, right, if it gets some good separation away from that moving average, now you know it's probably going to be turning bullish, and now you can look for that nice two-try, what I call a two-try breakout. It's basically going to be a strong move up into a 1, 2. Again, you want to go trap low on this because you want to stay away from that range, right? My ideal scenario is I'm not entering the trade, right? Anything else besides right at that low, right? Because you'll notice what happens is when we go back into the range, people are waiting to buy that pullback. Right? So every time it goes back into the range, you'll see they'll try to buy it again. Okay? Obviously, they're trying to complete that pendulum swing first, right? Which you guys learned about last night in the newsletter. So strong move down, right back up, right? Big move back up, 1, 2, almost the same thing, right? And then right back up into that trading range. Again, got to wait patiently here right now on the S&P. It's going to be a little bit of a thread in the needle tomorrow. And I'll tell you right now, we are ready for it tomorrow in our trade room, opening up at 8 o'clock Eastern time. How about some Nasdaq? Okay, so the hard stuff's done. Okay, the rest of the stuff is pretty basic, pretty straightforward. Nasdaq is pretty much balanced. There's a short-term bear move down. There's a short-term bull move up too. So I think we're pretty much balanced right now. Relatively neutral momentum here on the Nasdaq. This is a straight range-bound market. Whenever I have a trading range, I take the size of that range. I copy and paste it up, copy and paste it up. Depending on the size of the range, that will determine how many of these levels I get. We talk all about the trading ranges in the free trading course, which again is linked up in the upper right-hand corner. Take that range, same thing, copy and paste down, copy and paste down. That creates key levels of support. Most important thing about a range is stay away from the middle, right? Stay away from that middle, buy those lows, and sell those highs. Okay, pretty simple, right? Now, when it comes to breakouts, the most common mistake that you'll see traders make is they get stuck trading in the middle. For example, what I want to do is stay away from the middle, buy low, sell high. Here's the ideal scenario. The ideal scenario is we leave the range, we get down into this area here. Now remember, keep it on the pendulum swings, right? Pendulum swings give you a good idea of where. So this area down here is 76.53. Ideally, get down into this area down here, right? That's the first try for the sellers. Okay, the first try to break out. Then wait for those that pull back and wait for a second try. Once you see a second try, then you know you have the original breakout sellers and you have the pullback sellers. The boat's loaded. Everybody's in now. If they fail, this price will shoot back up into that range. See, rather than trying to predict the breakout, I'd rather be on the other side of those odds. The odds are not very good for breakouts in futures markets because futures markets are highly liquid, right? Unlike penny stocks or, other illiquid markets like cryptos or whatever, you can trade breakouts on those illiquid markets. It's more like gambling, to be honest with you, because they're so illiquid. But when you're trading a liquid market, these are blue chip stocks, right? High volume stocks, high float stocks, lots of volume available, or futures markets like the Nasdaq, right? Most breakouts are going to fail, right? That's why you see sellers selling high, buyers buying low, sellers selling high, right? That's why you want to keep looking to fade those breakouts. The bottom line is once I see those sellers, the breakout sellers trying, then I watch those pullback sellers trying. The moving average used to be somewhere right in here, and then all I need now is my signal. Once I get my signal, then I can be the buyer going back up into that range. When I do get that signal, now what I'll do is I'll actually measure the size of that move outside the range. I'll project that back up, and that becomes my next target, right? So target number 1 is at the opposite side of the range, right? Target number 2 is the pendulum swing, right? Makes sense? Okay, so kind of piggybacking on last night's video. So again, ideally, I want to go down, get into that green area down there, right? And then 1, 2, and then back up. Now, these take lots of different shapes and sizes, right? 1, 2, back up, right? 1, 2, back up, right? There's a lot of different ways that these failure patterns work, and we'll talk a lot more about those different variations inside the courses I've talked about so far. For now, though, the key is get outside that range. One of the most common problems you'll have in ranges is you'll see the pattern. It'll go lower, it'll go lower, that'll be the first try, right? It'll pull back, go lower, a second try, and you go, okay, now I'm ready to buy it. You get a candle on it. Now you're back in the middle, right? That's the trouble. These types of patterns, if you don't get outside that range, right, you got to get outside the range because here's why. When you get a nice deep move outside the range, it allows me to take a small amount of risk for a much larger amount of reward. The reason why that's so important is because when you've got a big potential reward on that trade, it's going to attract the professionals. The professionals are the ones who really move these markets. They've got big accounts. They've got plenty of bullets in the gun, plenty of ammunition to get that market back up right into that range. If you focus on these failure patterns, that puts you right in the middle of that range. The only people trading those are small money traders, inexperienced traders. Okay, and a lot of times what will happen is it'll go right back up and it will kick you out, right? And right when you're getting stopped out, guess what? It'll then come right back up into that range. It's a it's a mind mess, if you will, right? It'll mess with your head, and this is why ranges get such a bad rap, because ranges are tricky if you don't know the psychology of them, right? So I want to go up, right? Just like this one, right? I want to go up. Let those buyers sort of buy the pullback. Once I see them buying, then I know where their stops are and I can sell into their failure. Okay? That pattern is a whole lot more desirable than this one. I'm not saying you can't take those. I'm just saying, right, this second one, this is probably a 45% winning ratio, right? You take them big like this, right? These are up 75% and plus. So which do you want? I hope you say the higher reliability, right? This is a much higher quality trade up here because again, you've got more open space, right? And with more open space, you attract more people because everybody wants those big reward trades. Okay, so stay out of the middle, right? Go up, 1, 2, back down, right? Go down, 1, 2, and back up, away from that middle. Now, what does a breakout look like? A breakout would be, as you recall from, we talked about this earlier on the oil, a 1, 2, 3 break, right? So a 1, pull back, 2, and then 3 go, right? So 1 is a strong move up. 2 is the pullback to the moving average. Remember, this is where you'll look for them to try again and fail. If that second try is successful and we blast off, great. Mark up that low. Mark up the high. Mark up that high. Go all the way back down to that low, that major low. Mark up that hidden channel. And that's my buy, right? That's our buy off the low of that hidden channel. It's a very simple pattern. The problem, though, is you are going to see times like this one, right, where the market will look like it's going to break out. And then sure enough, it comes back and fails right back down in. So don't get suckered in. If this thing jumps lower, right, don't get suckered in trying to sell that pullback right there. It's just not reliable enough at that point, right, because that pullback is more likely now to fail and run back up into that trading range. Hopefully that makes sense, right? So now you know how to fade the breakouts, how to buy low, how to sell high using that 2-try failure pattern, and you also know what a 1, 2, 3 breakout pattern looks like. All of these are covered in a lot more detail in that free course in the upper right-hand corner. Let's keep going, right? Let's keep going because the Nasdaq, right, is very similar to other markets here tonight as well. I'm going to keep on teaching some more tricks here tonight as we go through the rest of these ranges. Over on the gold. Gold is very clearly a bear market right now. Now, tomorrow morning, we got that big PMI number at 9:45. Okay, so gold's going to have a pretty good session tomorrow. Gold has potential to really be a big mover tomorrow morning. The most important thing I think tomorrow morning is going to be is kind of taking its temperature before the news comes out. You know, we may have tomorrow morning, the market might be pretty quiet before that news comes out at 10:45. So, you know, when I say, you know, take the market's temperature tomorrow, you know, just when you come out tomorrow morning, if the gold will really slow tomorrow, it's probably because they're waiting for that PMI number at 9:45. I don't think it'll be that dramatically slow, but it definitely could be because the PMI number is a big inflation report. And of course, tomorrow morning at 9:45, it's a little bit later than normal for gold. So just be aware of tomorrow morning. It might be a little bit sluggish tomorrow because of that news at 9:45. The bottom line is it's a bear market into a trading range. Now, we talked about this already, right? I want to buy low, I want to sell high, and I want to avoid the middle, right? Now, selling high is going to be easy. Okay, you see a good example back here, right, of what a failure pattern looks like. We go up, the buyers try once, the buyers try twice. So if you're wondering kind of what that pattern looks like in a chart, that's it right there, right? So now we know we're bearish, so market goes up, let the buyers try. Again, you get the breakout buyers, you get the pullback buyers. See, it's very difficult to tell if that breakout will keep going, right? So what I do is, rather than trying to sell into the first move, I just wait for them to try again. And then once I see those breakout buyers once, breakout buyers twice, now I know where they're in trouble, right? Now I know where the pain starts for them. And I know I can now sell right back around their stops, right back down into that range. And remember, because you guys are experts on threading the needle now, right, for these ranges, right, this pattern doesn't help me very much, right? That pattern right there, that pattern does not help me very much. You look at these two patterns, right? This one's got a big reward potential. Okay, big reward potential. This one back here, right, small reward. You're not going to get a lot of big money traders taking a risk on that last example. So you really want to get it up. Buyers try once, buyers try twice, sell it back down. Now, as I mentioned earlier, I think we can definitely buy this market tomorrow. The only problem is we have to get this thing oversold. I took the size of that trading range. I copied and pasted down, copy and paste it down. Again, based on the size of the range, that will tell me how many levels I can use. And we'll talk more about that right in our membership classes. But the bottom line though is that if I can get this market to overcommit, now we have potential here to get a nice big pendulum swing back up. So imagine now for a moment we can see a strong move down. We get into this buy zone down here. The market's bearish, right? The market is bearish. It's not bullish. So we have to wait for the sellers to try once, try twice. Once I see those bears trying once, then trying twice. The way that I see it is that you're probably going to have traders who can't resist themselves, right? They'll try selling like, I don't know, the 23.6, the 38.2 pullback. But then you'll have wiser traders, and they'll wait for a pullback to the 50 or the 61.8, right? Because they're waiting for that deeper pullback there. So you want to wait to get the shallow sellers, right? The trigger happy sellers, and you also want to wait to get the old boy sellers, right? The old experienced sellers in there. You want to get them both in the same boat. Right? Because once you got them both wrapped in, now we've got those. Now we know where stops are, right? Now we know where, we know where pain begins, right? Human beings make foolish decisions when they're in pain, don't they? Split second, money on the line, right? What will happen is that people will take plenty of time to plan their entries here, but once this thing goes against them, what do? Get me out of here. And they don't care about what price. What do? They hit the close button. They close their positions. And what is that? When you hit the close button, it's a market order. And it's easy to see it run right back up. So think about if I was a seller now, where would my pain start coming in? And that's where I want to be a buyer here. Now, don't forget, right? Thread that needle. If this is a really big candle here now, what do? Take that limit order and put it just below that range. Right? Make it come back to get you. Okay? A good rule of thumb is you want to stay out of these ranges. These are really narrow ranges. So you want to make sure you're really getting in outside that range. Right? Stay away from the range. Because what will happen is you'll try to trade inside the range. It'll kick you out, right? Stop you out, and then come right back in your favor. That's painful, right? And that's what happens when you try to trade inside the range. So again, kind of threading that needle here right now as we go. It's a 1, it's a 2, back down. It's a strong move down. It's a 1, it's a 2, and back up. It's a slightly different pattern. Don't forget, 1, 2, 3, breakout. Mark that high off the low, buying that pullback. Or 1, 2, 3 breakouts, not just the opposite direction. I can easily take this as a breakout going lower as well. We just have to see the evidence, right, of that 1, 2, 3 breakout. Gold, a fantastic chart there. Stay out of the middle. Take the temperature tomorrow morning because that news at PMI number at 9:45. And let's wrap it up here on the euro. Euro is kind of a culmination of everything that we've talked about. Most important thing is a little bit up, a little bit down, a little bit of sideways, right? Sounds like I'm dancing here, right? A little bit of left, a little bit of the right, right? Shuffle forward, okay? This is, of course, a range-bound market. I'm taking the amount of the move above, right? The amount move below. That's where the bears want to get to. So this whole area down here is a big support level. This whole area up here is a big resistance level, right? Now, the big thing about this range is it's really narrow. Right? It's really narrow. It's a very narrow range. Why are ranges that are narrow, why are they big important clues? Because remember, we don't want to trade inside those ranges, right? Because when it's narrow like that, even a good looking failure pattern will kick you out just to see it come right back up in. So skip inside those ranges, right? And get out, right? Get out of those ranges and buy it from there. Now, because this is pretty much neutral, you can really probably be on both sides of this with the same amount of effectiveness. Gold was obviously bearish. This one, I mean, I think you're pretty balanced here right now. I mean, yeah, there's that bearishness overall here right now. Before that, though, there was just much bullishness. So one thing I do find interesting right now in the euro is you've got the 14,000 up here, the 13,000 down here, and we're actually right about halfway between these two big round numbers. And of course the euro loves some big round numbers, right? It basically rotates back and forth from 15, 14, 13. We're just right now balanced, I assume, because of that big news report tomorrow morning, just for 10 o'clock Eastern time. So the plan is, again, I think if we go lower, one try breakout sellers, two try pullback sellers, back up into that range. We go higher, one try breakout buyers, pull back, two try breakout buyers, right? And then of course, right back down in. And again, these all take on different shapes and sizes, right? Strong move up. Buyers try to buy. They fail on the way back down, right? Same idea. Go up, 1, 2. If I can get lucky, I can get that pullback, right? That breakout pullback, failure pattern, into breakout pullback pattern, and then back down in. Just again, use my advice, use those limit orders to stay away from the middle, grab those edges, and thread that needle here, right? Again, 1, 2, 3, breakout, mark up those lows, buy that low, rinse and repeat, right? Over and over again. Stay away from the middle, buy those lows, sell those highs, use the pendulum swing to plan your objectives, right? And then again, use it to plan your targets, right, on the opposite side of that, right, of that range. All right, guys? Boy, oh boy, it's been a great week here in our trade room. Been a great week on this nightly newsletter. I hope you guys learned a ton of new tips and tricks tonight on this video. But again, don't forget to give me that feedback. I want to know what to you is the biggest obstacle standing between you and becoming consistently profitable, because whatever's most important for you, I want to do more of that on this YouTube channel going forward for the rest of the year. So thank you so much for your comments. Thanks for the thumbs up, right, as support. Always appreciate that. And keep in touch. Right? Don't forget, you can always come out and join me as a guest in our trade room. Grab that big red button right next to my ugly mug and join our free trial. Call me anytime in the office if you have any questions, and feel free to get registered as a beginner, intermediate, or advanced member here on our website. I'm always here to help. So keep in touch. And as always, guys, don't forget, Friday is a holiday. This is the last newsletter of the week. I won't be doing one tomorrow night because the markets are closed on Friday. The next time I see you on the newsletter will be next Monday evening when we come back, right, from searching for Easter eggs, right, in the backyard. I got a bunch of Easter eggs to hide from the kids next door here this weekend. Having some fun with that. So the bottom line is, keep in touch. If I don't see you guys tomorrow morning in our trade room, I'll see you guys same time, same place next week on our newsletter. Have a great weekend. A very happy holiday to all of you who celebrate. If you're traveling, safe travels. Come back and see us again soon sometime. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.